Hello everyone, this is Ryan Chen here. And inside this video, I'm going to be showing you what you basically do as a private credit broker or private credit deal maker or a business loan broker, whatever you want to call yourself. This is what you do when you're providing business debt. Now, to summarize everything in a high level, you're basically doing two things. You bring access to capital or you bring access to clients. And what that means is pretty self-explanatory, by the way, is if you have deals on the client side, you are bringing access to clients that will borrow money. If you have capital on the other side, you are bringing access to investors or lenders or specific scenarios, special purpose vehicles that will place debt to the borrower side. Now, most people, most brokers, most firms, they specialize in a few debt placements because you can't be good at everything. And just to name a few, you can think your typical your cash advance companies. You can think your commercial real estate lending companies. You can think your equipment finance companies. You can think your private credit fund or venture debt fund or even your bank. Now, people can call themselves different things. They can call themselves brokers. They can call themselves investment bankers. All of this is just a label, by the way. It doesn't fucking matter. You can call themselves private credit analysts. But all you're doing is they're bringing in capital that they're borrowing and they're deploying it with you. And whether that's the case of you brokering a deal where you don't actually hold responsibility if the deal goes bad, or you do own some sort of responsibility if the deal goes bad, i.e., in a lot of the clawback provisions in the signed agreement if you're a broker, you're still borrowing money. And why do I say this? I say this because if you're a private credit fund, you're going to investors, you're aggregating capital that they allow you to use. You're basically borrowing money from them. You owe them a preferred return of 16% per year, or 15%, or 8% that you're supposed to hit on an annual basis. And anything beyond that, you do a carry split. That's you borrowing money. That's an example of a private credit fund borrowing money. If you're a cash advance lender, you raise money from your friends and family, you borrow the money. The only exception to this is if you already have the money yourself and all of it is from yourself. You have no LP partners, you have no warehouse line, you have no access to outside capital except your own, then you're just using your own capital. But you're still solving for one thing, which is access to capital. Now, all these different type of companies, they specialize in a specific domain. And because they specialize in specific domains, when they go out there to raise money from investors or borrow money from banks or warehouse lines or get investors or friends and family to invest, they are very crisp and crystal clear on what they specialize in. And because it's crisp and easy to understand what they do, because when you specialize in one thing, you typically are better at that thing and you can easily explain it to outsiders, at least better than if you were trying to do everything, you will be able to raise more money for that specific purpose. And why am I making this video? I'm making this video to really explain to you that, again, the predominant function of an investment banker, of a private credit analyst, or business loan broker, or a private credit broker, or a private credit deal maker, is to just solve for two things. The first thing I already covered, access to capital. The next thing is access to client. And this is basically channel your client base, people you know, clients who will borrow. This is just everyone who will borrow money from the first group, right? That pretty much summarizes everything. In my viewpoint, even if you're a broker, you're basically borrowing money because you have clawback provisions in place. If you do certain things, you have to pay back the principal of the loan issued. If you're doing deals, you see the deals being underwritten, so you understand the process, and you're just using another fund's money, which they also borrow from someone else, and that solves for one side of the equation, which is access to capital, and then the other side of it, access to client. So yeah, to summarize this video, as a private credit deal maker, what you'd solve for is two things: access to capital and access to client. Hope you guys enjoyed this video. If you guys have any questions on what I just said, leave it down below, and I'll be happy to answer those. If you have a specific concept or some specific question you want me to make a video about, I'm happy to do that as well. Thank you for watching.